All right, everyone, got another interesting video for you again today. Going to cover some more bullish news for Riot Blockchain and also touch on some Charles Schwab history that kind of ties into everything that's going on right now in the crypto space. So first and foremost, Fidelity, Vanguard, Charles Schwab funds have been loading up on crypto mining stocks. Three of the largest asset managers are diversifying their funds to hold blockchain stocks, throwing more establishment financial might behind Bitcoin's technology. So Charles Schwab has begun purchasing shares of Riot Blockchain, joining Fidelity and Vanguard. Both companies already investing in Riot, Hive Blockchain, Hut 8, and BC Group. So they're allocating mutual fund holdings to a cryptocurrency company according to the financial filings with the SEC. Goes on to say Fidelity has a digital assets arm, a trading service, a Bitcoin index fund, and so on. The main point here being Charles Schwab purchased about 23,000 shares of Riot. Two Vanguard funds own about almost 1 million shares of Riot collectively, and two Fidelity funds were invested in about 176,000 Riot shares and about 2.7 million Hive shares. So obviously you get the point here. This article just really segues into what's going on right now. So Charles Schwab, Fidelity, Vanguard, the largest asset management companies and brokerage firms in existence, are buying crypto stocks. This is going to continue to happen. Why this is bullish, in case you don't understand, is if they have mutual funds or ETFs that by default include Riot in the funds, as people continue to buy those mutual funds and ETFs, Schwab and Fidelity will continue to buy Riot. That makes sense. So the more demand there is for these funds, the more demand there's going to be on Riot, and so on. Next up, also, this just came out yesterday. Riot Blockchain continues hash rate expansion to 2.3 exahash and provides deployment update. Combined with the previously disclosed purchases of Bitmain S19 Pro Antminers, the company now expects to achieve a total hash rate capacity of 2.3 exahash by June of next year, with 22,640 total miners deployed. As far as the company is aware, no other publicly traded Bitcoin mining company has disclosed a hashing capacity exceeding 2 exahash. So Riot is well on their way to exceeding 2 exahash, which would make them above and beyond any publicly traded Bitcoin mining company. And as I've mentioned before, over and over, Riot Blockchain and Marathon Patent Group are the only ones of these two of Bitcoin mining companies traded on the NASDAQ. This will give access to any discount broker, your Robinhood, Schwab, Fidelity, Vanguard, you name it, E-Trade, TD Ameritrade, they're all going to have access to stocks that are traded on the NASDAQ. Robinhood doesn't have many over-the-counter items, I don't believe, if any. So finding like Hut 8 and so on, as I mentioned in the last article, those are not going to be on Robinhood, but you will find Riot and Marathon Patent. So these two are going to be the winners in Bitcoin mining at least into next year, I believe, and Riot is winning out of the two as far as their hash rate. So that's why I'm more bullish on Riot. All right, moving on. In line with the company's previously announced purchase of 13,100 S19 Pro Antminers from Bitmain, Riot expects to receive and deploy new miners every month starting this month and continuing through June of 2021. When completed and combined with the company's existing fleet, the company expects to have 22,640 miners deployed, the vast majority being the next generation S19 Pros. All right, so Riot is going to have the largest hash rate of any publicly traded Bitcoin mining company as of now, and that should be done by within the next 8 months. How does this actually look compared to the total Bitcoin hash rate? I've talked about this before. but right now it's about 140 million terahashes per second for the entire network, and 2 exahash actually gets you to about 1.7% of the entire Bitcoin hash rate. So you know, in exahashes, the hash rate is 140 total. All right, and Riot, take 2.3 divided by 140. There you go, 1.64% of the entire Bitcoin hash rate. That's massive. All right, so this is why I'm bullish on Riot. I think it's going to be a story similar to gold. You know, a lot of people like to buy gold mining companies instead of gold for numerous reasons, some being that they pay dividends. Okay, you get exposure to gold, you get exposure to the underlying assets that the company might have in case they go out of business, and so on. So that's the benefits of being a shareholder of the company instead of the commodity. All right, so moving on to the asset managers. So I just wanted to point out that Fidelity, Vanguard, and Charles Schwab combined have about 13 trillion assets under management, with Charles Schwab being 3.25 trillion. So when these companies start getting in the game, and I'm about to show you they're making plenty of moves to do so, but when they start getting in, that's whenever the validity of the industry is established. All right, we are definitely moving into a mass adoption point. That's why I've been trying to prepare people. That's why I've created this channel, so everyone can just stay aware that this is coming. This is a mass adoption phase of a new asset class that we haven't seen happen since the 1600s. Okay, so the opportunity here is like nothing we've probably ever seen before. It's the amount of growth that will come is going to be, it's going to make the dot-com bubble look like a little blip. I'm fairly confident in that. All right, understanding these companies more. So a little bit about Charles Schwab. As I've mentioned before, I used to work there. I worked there in the Charles Schwab Advisor Services. I'm not a financial advisor. I used to be, but advisor services alone is not a client-based thing. You actually are assisting advisors with their clients at Charles Schwab. But anyway, just a few fun facts. 80% of all registered investment advisor client assets are held at 4 firms: Charles Schwab, Fidelity, TD, and Pershing. So this is interesting, right? Because Charles Schwab and Fidelity are now buying crypto-based mining stocks. Okay, so the herd is coming. All right, all of these registered investment advisors are going to have their clients calling when they see the market moving. They see crypto going up. They're going to say, "Why don't I have any? Or do I already have some? Please tell me I do." Right? That's how it works when you're dealing with these high net worth individuals. They really do have their little family office, these registered investment advisors that basically manage all their money, and it's very hands off. Okay, so these advisors are undoubtedly going to be buying into crypto and mining stocks in the coming years. So stay aware. All right, but all of this collectively together, it just is kind of funny to me, because as I said, I used to work over there at Charles Schwab. And just a couple of years ago, the CEO here, Walt Bettinger, was always, crypto is a fad, or, he would say a lot of things like he doesn't see it having a future, this and that. I got a little article here for you kind of summarizing that. It says, Walt Bettinger apparently isn't a betting man. He's refusing to wager Charles Schwab and Co.'s money on the coming of cryptocurrencies. In fact, he's not even taking a seat at the table. The San Francisco firm most RIAs call home is conspicuously absent from the rush to create cryptocurrency trading and custody platforms, even as its next closest rivals, Fidelity, TD Ameritrade, and Pershing, are dealing themselves in on the trend. It's fair to argue it's hard to get excited about something that's barely a blip on Schwab's radar. With a total aggregate market cap of $300 billion, cryptocurrencies equal about 10% of Schwab's $3.2 trillion in assets under management. 8,000 registered investment advisors custody $1.7 trillion through Schwab Advisor Services, about the same as Pershing, TD Ameritrade, and Fidelity combined, as I showed you in that chart. So Anyway, I just wanted to point this out because it also says, in fact, Schwab could leapfrog into the game at the drop of a hat by making an acquisition. It's funny because this article came out September of 2019. I think within a month after this article, Schwab announced that they were going to be buying TD Ameritrade. So there you have it, TD Ameritrade right there. At the drop of a hat, they could make an acquisition, and that's exactly what they did. All right, but this deal was just finalized as of yesterday, I believe. So yeah, October 6th, Charles Schwab completes acquisition of TD Ameritrade. This collectively creates company with approximately $6 trillion in client assets across 28 million brokerage accounts. It enhances the company's position as a leading provider of services and solutions to investors and independent advisors. The Charles Schwab Corporation today announced that it has completed its acquisition of TD Ameritrade. The combination will create a company with enhanced scale, better portfolio of world-class services and solutions, and talented team. This is a historic moment that brings together two leading companies with proud and successful histories of making investing more accessible to all. But let's see, can you... Nope. Can't find crypto in this article quickly. But to me, I think that this is Charles Schwab's crypto play. You're not saying it in the article, they're not saying it openly. But what better way to dive into crypto than to just go ahead and at the drop of a hat make an acquisition. All right, and over here, right on TD Ameritrade's website, announcing an investment in ErisX, a regulated exchange for cryptocurrency trading. Not going to dive into this too much, but it says interested in cryptocurrency trading at TD Ameritrade. Email crypto at TD for updates on when it'll be available. So there you go. TD is going to do crypto undoubtedly, and Charles Schwab decided to go ahead and buy them. So I wouldn't be surprised somewhere down the road to see something like this with a Coinbase or something. And yeah, I mean, I don't know. It's hard to say. I wouldn't want to sell the company if I were an owner of Coinbase. I would just want to stick with the growth and just be the industry leader. But I would not be surprised to see, a Gemini or a Kraken maybe sell a portion of their United States or so on. Whenever a company like this comes to you and says, I think the deal was something like $20 billion. So they say, hey man, we're gonna buy you all out. Let's close shop and partner up, and we'll give you $20 billion. So that's tempting, right? I'm sure. Take the money and run comes to mind. All right, but we'll see what happens. Last but not least, I want to go through a little bit of Charles Schwab company history just to walk with you, just show you how innovation is how they came to the forefront. So in 1975, on May 1st, the SEC mandates negotiated commission rates for all securities transactions. While many brokerages take the opportunity to raise commissions, Chuck seizes the opportunity to create a new kind of brokerage, a discount brokerage. In September, Schwab opens its first branch in Sacramento, California. All right, I want to touch on that really quick. So Charles Schwab came from nothing, basically in the 70s, to this massive firm, as I've shown you. And they did it by being the discount broker. They did it by putting the customer first, just like Amazon. What does Amazon do? They make sure that you get your stuff you ordered and you don't even have to get out of your pajamas. They'll get it to you tomorrow and they'll get it to you for free. All right, and that's kind of what Charles Schwab did. Right now they have zero commission trading. One thing that bothers me about Coinbase, or any of them really at this point, is the high fees. They charge crazy fees for trading on their exchanges, and I guarantee you companies like Charles Schwab, Fidelity, TD Ameritrade, and so on are going to make it so Coinbase has to drop to zero. It's going to happen. Right now, they just kind of have the monopoly on the industry, but we'll see as we move along. My bet is we'll see very low trading fees soon. So, in a bet the company move in 1979, Schwab invests in the Beta mainframe system. The success of this automated transaction and record-keeping system demonstrates that technology can be a key growth driver. All right, so in 1979, they were using automated transactions and record keeping. Kind of sounds like blockchain, right? But that's how they leapfrogged into the industry. All right, in 1980, Schwab establishes the industry's first 24-hour quotation service. Oh man, now we're really getting ahead of our times, aren't we? But this is the interesting part about all this. Kind of goes into my acquisition thing with Coinbase and Gemini, maybe so on. But in 1983, Bank of America actually bought Charles Schwab for $55 million. All right, and this was interesting because Chuck sold the company for $55 million to Bank of America in 1983, and then in 1987, management leads a buyback from Bank of America for $280 million. So Chuck didn't feel good about selling to Bank of America for 55, so 4 years later he buys it back for $280 million. So that almost 5 times the amount of money. All right, interesting. So Schwab introduces Telebroker in 1989, an automated technology for telephone brokerage service. You'll see the theme here as we go. I'm not going to dive too much into it. Schwab.com launched in the early 90s, online trading during the historic bull market. And in 1997, the company finally made it to the S&P 500. So not finally. I mean, they went from the 70s to being a little startup company. Actually, 83, selling for $55 million. 4 years later, buying it back for almost 5 times as much. And then 10 years from that, they're now in the S&P 500. So definitely an amazing history for the company. And they did it by being innovative, making low commission trading. I believe they were the first to do this telebroker, as well as maybe online trading. I don't remember all the history of the company, but the point being, they led with innovation first, and you're going to see history repeat itself again with crypto. The next thing you'll see, I think, is innovating this all important area of T+2. So last but not least, I think a lot of people in crypto are just kind of confused about how money even moves around the world. To begin with, how the current financial systems operate, I think you need to have a basic understanding of how that works before you can place your bets on which crypto might win. Because you have to understand, they're all going to have their own certain use case. And I'm sorry, but Bitcoin does not have much of a use case. It has a store of value and it has a massive hash rate. Now, that hash rate needs to be a layer 1 security layer for networks to build on top of. All right. Not going to get too far off topic, but that's why I like Elastos, because it has connected Ethereum and Neo smart contracts to the Bitcoin hash rate, adding another security layer. All right. So Bitcoin, use case, store of value, and security layer. All right. But as far as moving money around the world rapidly, Bitcoin does not do that. So you have to start looking for who does. All right. So let's check this out. Stock settlement. Why you need to understand the T+2 timeline. All right, the key point, stock settlement violations can occur when new trades are not properly covered by settled funds. Although settlement violations generally occur in cash accounts, they can also occur in margin accounts, particularly when trading non-marginable securities. We discussed the main types of settlement violations and how to avoid them. The real main point I want to get at here is first and foremost, what is settlement? Settlement marks the official transfer of securities to the buyer's account and cash to the seller's account. When does settlement occur? For most stock trades, settlement occurs 2 business days after the day the order executes. Another way to remember this is through the abbreviation T+2, or trade date plus 2 days. For example, if you were to execute an order on Monday, it would typically settle on Wednesday. For some products, such as mutual funds, settlement occurs on a different timeline. Okay, so what's really going on here is if you sell a stock today, you don't actually have access to the cash for 2 days. in simple terms. So if you go on there, you sell on a Monday, you sell your Amazon, you want the cash, maybe you want to move it because you want to buy some crypto today, right now, or you want to buy whatever the hell it is you want to buy. You want to do it somewhere else. You don't actually have access to the cash because the settlement system takes 2 days. All right, so very glaring, obvious need that blockchain can fill right there, right? Anyone that's in crypto can see right through this hole, understands that, okay, this is an area that we can immediately innovate with blockchain technology. All right, I think what we saw the CFTC or SEC commissioner the other day say that eventually the entire stock market will probably run on a blockchain system. Guarantee that's what happens. All right, so that's what I'm saying. Okay, who's going to tokenize these assets? It might be Ethereum, it might be Tezos, it might be Ethereum and Tezos, it might be Cardano, it might be all three. You know, who knows? You're trying to pick the winners. That's what we're trying to do here. But there is an obvious need. All right, and I just want to bring this to your attention because when it comes to filling needs like this, you tell me, are Charles Schwab and Fidelity going to want to use Bitcoin, which is slow and expensive to move money? Are they going to want to look for the one that is fast, instant, and cheap? Are they going to give their clients slow and expensive? Are they going to give their clients cheap and instant? All right. Do they want T plus 1 hour or T plus now or T plus nothing? You know, just T, right? So right now, the platforms best designed to execute T plus 0 is going to be XRP and Stellar. Those ledgers are perfectly designed to handle something like this. That settlement between industries. So this is right now, if you're in the XRP community, you'll see a lot of talk about the DTCC. So the DTCC is the automated clearinghouse that handles this T plus 2 settlement right now. This 2-day process is getting disrupted. And as I'm saying, Ethereum could do it. I just think Ethereum is way over congested at this point, and it's not suited to handle it. So XRP, perfect fit for something like this, handling the settlement between assets. Closing the sale and getting your cash. Nothing's going to handle it better than a fast, cheap vehicle. That's what you need. So just want to put that in your mind. You got to understand the basics of traditional finance, I think, before you can go on and try to pick winners in crypto, because you need to understand what use case are they even helping. If you have you need to have a product that can sell, right? You need to have an idea. People have to want to use it, and there's not really a need to use Bitcoin for much in any of these industries. That's why I'm not so hype on it as doing anything more than store value. But as I talked about in the beginning of the article, Fidelity, Vanguard, and Schwab are all buying Bitcoin mining companies, essentially. So the money is already being invested into Bitcoin. So whatever narrative they decide to keep going with it, I think that it will have staying power. So not to knock on Bitcoin, I just think that there's other use cases out there that can be filled by better suited cryptos. So there you have it. Hope that was interesting and informative. As always, please like and subscribe, share with your friends and family, and stay tuned for the next one. Thank you.
What is a cashless society? What does it actually mean in a literal or high-level sense?
Money will become like these, relics of a different age, and will only be found in places like this. In other words, hard cash will disappear. It will become electronic, transferred by things like these.
Then Tracy is in Beijing to show us what a nearly cashless society actually looks like. Ben, good morning.
Mobile payment transactions in China reached a cumulative total of 277.4 trillion RMB in 2018, ranking #1 in the world, according to the recently released statistical report on internet development in China. As of June 2019, online payment users in the country reached 633 million. The cashless society is now approaching.
When's the last time you paid with cash? Well, chances are cash has taken a backseat to the plastic in your wallet and smartphone pay apps.
Denver 7's Ryan Luby explains the digital pay revolution and why not everyone is on board.
The cashless society, the cashless society.
The cashless society.
The cashless society is now approaching.
The cashless society.